Hello. Are we supposed to do like a superhero entrance or something? Like a superhero landing when we start?
Yes.
All right. I don't know.
Yeah, that worked. Well done.
Cool. No, you.
I'm not on a slidey chair. I'm not doing that. I'll
Oh.
just fall over.
Okay. Why are we like this? Yeah, we're damaged. Damaged goods. At least I am. Anyway,
Hi, welcome to Crypto Talks.
Welcome back to Crypto Talks. My name is Phil. That's Rob. He's got a boa in his hand. Right. And yeah, it's Macro Tuesday again. We haven't done this since before you left for your vacation thingamabob, Rob.
Mm-hmm. Yes.
And so we have been keeping track of all the things that we need to keep track of. And right now I just realized that I didn't open the right chart.
Well, that's a clever thing to do.
Yes, it's what I always wanted. No, but we're going to be talking about all kinds of things here. We're thinking we should just do a kind of a nice overview. Look at some CPI stuff because we did get those numbers in a little while back. So I think we're going to start with that. We'll probably end up talking a little about what's going on in the Middle East right now, and yeah, just overall global bad stuff and maybe some good stuff.
Maybe.
And see if we can discern some type of prediction or something that we think might how the markets might react to all this stuff. So
yeah,
yes,
sure. Good luck with that.
Yeah,
good luck with that. Let's go.
Sure. Just give me one really quick second here to find the correct things. Well, actually, you know what? Let's do this. I'm gonna show the Trueflation charts instead because I always have that open because I can. So it's funny how Trueflation works. I don't know if anyone has seen this before, but Trueflation they calculate the inflation in the United States specifically, but they do it the way that a lot of people claim that it should be done. So when you do when the government does inflation calculations, they basically, let's take food for example, they grab a basket of food items and they then use those items to, it's all the items actually, but let's say you look like expensive meats like
steak, just
steak for example,
steak per ounce or something like that,
something like that, and then they look at that and then they see how prices are inflated over time. But then during high inflation, people tend to stop buying that type of food. And so instead of just, calculating the price increase, keep on calculating the price increase of that, they change the item to something cheaper. Maybe a cheaper piece of meat or whatever, or a cheaper cut. And then they use that. And so it kind of doesn't calculate the actual inflation that accurately because they keep changing the items, which kind of defeats the whole purpose of having this thing being done anyway. But Trueflation, they use the same item always, so they tend to show it more accurate.
A very quick point on this then. We mentioned on Friday, on the Friday Hangout, there's a question about CBDCs, and so I was talking about, say, some of the relative merits. This would be potentially one of them, whereby if and yes, okay, the idea of the government knowing everything you buy is abhorrent and evil, but let's say it was anonymized and they just wanted to know what you were spending and where. If they had something like, we're going to actually take the CPI out of our hands and out of the calculation, we're going to actually calculate it. So we're going to just look at what you actually spend on the supermarket and how much that goes up per year. We're going to use that figure. That would be an actual example of really positive implementation of CBDCs that would get around this kind of crap that they pull. Now, yeah, they could just not pull this crap in the first place, but then this is where we're getting into the idea of transparency and saying, okay, we're going to make this transparent and available so you can see every decision we're making without any possibility of corruption. Well, if US government doesn't do it or the British government doesn't do it, some governments will, and over time, that'll hopefully we have this data. 20-30 years ago, we would have no clue other than what the official government data was. 60 years ago, you would have no clue even what the government data was. So it's
improving slowly but surely.
Yes.
But yes, so what I was trying to say with this is that I don't know if you can see it on the screen, but it says here U.S. government reported a rate of 3.2%, and Trueflation claims it's 2.11. I tend to lean towards believing Trueflation more because I prefer that way of calculating this, and I have a habit of not really trusting governments all that much. But hey, to each their own, right? And I'll say this though as well. Mostly, when people look at numbers, important economical numbers, and everything, almost everyone kind of looks at the official numbers. The official numbers matter more than the actual numbers, if that makes sense. Okay.
Yes.
And just so everybody understands that that's the truth, or the sentiment, even though this is more accurate for just a regular person who wants to know what the actual rate is. So it's gone down. The target is and has, I think, always been around 2% inflation, which is manageable, right? Currently, it's about 3.2%, and it's actually gone up in the last couple of months, the rate of inflation. So inflation is still going. I mean, things are always getting more expensive because of money printing. But pushing this down to the 2% kind of threshold that they're looking for is something that's kind of their goal. And so when the report came out last week, 2 weeks ago, I think, was it? We got numbers that said, okay, inflation is up 0.1% more than we expected. They expected an increase of 0.2%, but I think the increase was 0.3%, which kind of scared the markets a little bit. Not much, but it did something. And that's one of these macro perspective things, right? It has an effect on the overall market and the sentiment for traders and investors overall. But the PPI, which is what the fuck is... gosh, I'm Swedish. I can't remember the words. Producer price index. There we go.
Yes.
Sorry about that. I kept forgetting what it is. Producer price index, which is the cost for basically building things or producing value in the markets and whatever items, stuff. Right, it's for the production. It's for the producer. Yes.
So it's the actual cost of producing goods in the market.
Producing goods. Yes, and they were expecting an increase of that, but it actually decreased instead by 0.2, I believe it was. And so that's very positive. So we got really crappy CPI numbers, and then the day after we got really good PPI numbers, and so the market kind of went boo, and then yay the day after, a little bit. And so now the sentiment's kind of like, what do we care more about, right? So I don't know if you want to touch on that somehow, Rob, because you tend to have a good insight on that stuff. Meanwhile, I'm going to search for the actual numbers on the page.
Ultimately, this is a volatile period. Volatility works both ways. Measures come in at different times in different... I don't know. I'm not completely very well up on how this number's calculated or why it's changed or why it's jumped, because I don't place that much value on it month to month. I just look at how it moves quarter to quarter, year to year. I'm looking at the overall trend, and the overall trend as it stands is still one that's kind of pointed downwards in the sense of where the target's going. Things are still going up. Maybe if you just want to pop onto my chart for a second.
Oh yeah. If you share the screen, that would be great.
I thought I was doing that already.
We're so prepared for each stream, you guys. Just so you know, we're prepared for several seconds before we start.
Oh yeah. So,
There you go.
dumbed down version of our favorite chart. So the yield curve. So blue is the Fed funds rate, in white is the US 10-year government bond, and in orange is the US 2-year. And it's still upside down. The US 2-year is still yielding more than the 10-year, and it's heading back upwards. And this isn't the sort of thing that the Fed wants to see. Regardless of what actual inflation figures are, the bond market is the one that speaks the truth. And this is where, if I want to know what the CPI numbers are or what's happening with inflation, I look at the bond market. I don't look at what the government CPI numbers are doing. And so right now, the bond market is not signaling a reduction in risk. It's signaling, if anything, an increase in risk. The stock markets are all, is coming down as it is from all-time highs. And it's really, I think, we said we'd touch on the war. I think it's just a case of uncertainty. I think the war is just which war in this sense. I think that Iran attacking Israel is a bit of a non-event, in the sense that they spent a whole week telling Israel what they were going to bomb, where they were going to bomb it, how they were going to send the bombs, and going, here you go, come and disrupt these, but make it look like we bombed you, please. So it was Iran have done this before, where they basically took like a precision guided missile or a number of them, and happened to strike just outside a US airbase. And it's like the statistical likelihood of them missing that many times is just minute. So this is politics. It's Iran is a very sort of insular country, and they're able to say, look, we responded, we did our thing. Unfortunately, it wasn't successful. Damn those imperialist Western dogs. And so that's not so much a big deal. What's maybe more of a big deal is China, and it's going to keep being China because China has so many problems. And anyway, I feel a bit like we keep bashing on China, but ultimately, if
Trump.
Well,
China.
Well, yeah, and that's this comes a question with the election coming later in the year: is what will the policy response be for whoever wins to what China are doing? And China's response is basically stimulus. And the way China like to do stimulus is they like to pick certain sectors and basically subsidize the absolute crap out of them and push them onto global markets and basically undercut everybody that they can. And the market they seem to be aiming at currently is the automobile market, the EV market. China are the biggest manufacturer of EVs, and I'm noticing a fair few pushes for BYD. I don't know if you've seen them around. That they've kind of just appeared out of nowhere, and that's the leading Chinese EV manufacturer. So expect to see them everywhere, and expect to see them very cheap. So these will be subsidized cars that will be sold on like company car schemes, which Western governments are going to lap up because look, cheap EVs, and we're going to buy them and we're going to undercut our own market. And that's exactly what China wants. So the response to that is generally in the form of tariffs. It's not just EVs. There's a whole bunch of things they're probably going to start really pumping onto our markets. And so tariffs are something that's going to come up. And obviously Trump does love a good tariff. He loves a good trade war. But what people maybe Republicans don't think is that Biden's probably going to respond in an almost identical manner. They're not dumb. These, the way I see the two parties is largely 80% of what they do is the same. The 20% is basically just to get us talking about it. So don't worry so much about that, but it's still uncertainty. What's going to happen if China starts falling apart? What's going to happen, how they subsidize and how they're going to stimulate their economy? Because they've got a whole bunch of problems, and we've touched on them week after week. But yeah, there's a lot of uncertainty. Whether it's Israel, whether it's global shipping, whether it's China, it's these things make people jittery. And right now, say that the economic data is not good. You see it right in front of you. This isn't the trajectory we wanted the US Treasuries to be heading in. We wanted them to be heading more. We want the value of US debt to go up. We want it to be more trusted and therefore sought after. We're not seeing that. Now, within that, as Bitcoiners, when Bitcoin's in a secular trend, we can look around and say, who gives a shit? Bitcoin's number go up. Let's see you in a few years. And that's absolutely correct, is that maybe there is the likelihood that this is a time where people are looking at the bond market, looking at it, going, I don't want a piece of this for 5% yield, but I may want a little bit of this Bitcoin ETF. And that applies to gold as well. Gold has done quite quietly, really, has sort of crept up, broken out. It hit 2,400 from a breakout of 2,000. So there's a lot of warning signs in the big picture, but these are long multi-month or multi-year trends, and we've been warning about them forever. We have to bear in mind that doesn't necessarily mean that crypto is going to crash. We do have to bear in mind that at times like this, that the ETF FOMO ran everything up. They stopped buying. As soon as they stopped buying, we saw what happened, that the prices started falling. And now we're testing. Bitcoin is in a position where it's not in an uptrend, and it's struggling with support levels and failing to break new highs. So until it starts to really put in a solid uptrend, be wary. And that applies to the sort of the whole macro landscape. I think if we look at how the stock market's behaving, then let's look through my absolute mess of stuff. I mean,
yes,
it's it's okay. In crypto land, this is a nothing burger move. It's a few percent down, but in stock land, where everything moves at the same speed as a glacier, 4% down is a big move in the stock market. And we'll have to see where this goes, because in an uptrend, we tend not to see 4% moves down in the stock market. And maybe, it's going to be like one of these that got bought up, where, we get these drops down and then it V's up. This was back in 2021. But generally, when you start seeing volatility like this, it signals not good things. Or at least, a period of consolidation. So like here, you see this, it took, that's not a small move. We're talking,
that's a sideways range for
a sideways move for 162 days. So that's 6 months of just blur. This is only the hourly chart. So this don't think that we have to sit in an uptrend, and if we break this uptrend, this bullish structure, which we kind of have, it could be the signal of a new downtrend. And
in Bitcoin, we've been sideways for 47 days already. If you really twist the screw.
If we just have a look and just compare Bitcoin, new price scale, obviously. Oh, why is that not date?
I don't know.
I don't know. I mean, it's quite clear. Bitcoin topped first, and this is as it does, because we see very likely. Oh, look, Bitcoin already in a downtrend by the time the stock market topped out. Say 2021 April, that was a bit of a misnomer, but oh shit, we're gonna have to turn it onto log because stocks are crap. But 2017, you saw we same again before the COVID crash again, and similarly we also tend to bottom earlier. So Bitcoin bottomed here, a little bit earlier, and I'd say we've argued for a long time that actually this was the bottom of Bitcoin, and this was just the FTX crash. That was a blip. So we can see this, that Bitcoin does tend to lead the market in one direction or another, and that correlation's only got stronger over time, and we can ignore Bitcoin's correlation to the macro market for a certain time because Bitcoin likes to just do Bitcoin things. But really, if you actually look at this period, just from 2017 onwards, there is no detachment from macro. Let's be clear on that. Bitcoin is now a macro asset, and if stocks go down, Bitcoin's going to go down, and it's going to go down by a lot. Exactly the same way. Stocks, you see, the stock market is down 4%. Bitcoin's down. What are we at now? Currently about 20 or 17, something like that. Not tragic, but if stocks decide that they're going to have a 15% tumble, Bitcoin's having a 50% drop, likely. It'll be short. It'll be, maybe not 50, but maybe 40. But it might be short. It'll be a very clear buying opportunity. And yeah, that's just the way that it is. Now, is there any real reason why stocks are going to continue dropping other than the macro landscape deteriorating? And there's no, that doesn't happen until it happens. And this is kind of the problem, is there's no front running it, because if you try and front run it, you can sit on the sidelines for 9 months while the market tears. And it's only when the market turns that you think, oh shit, yeah, that was really obviously the top. So yeah, I'm at this point, I'm no leverage. I've bought the dip here. I'm sitting in spot. I will, if it drops further, I'll be looking to maybe just catch an uptrend. But no, stocks are heading down. Bitcoin's heading down. We're struggling with support. That's just the fact of it. So, yeah, we last week or two we've been bullish on TA Mondays about trying to looking for this bottom and going, okay, now we want to see this uptrend. Well, we failed that uptrend. We haven't managed to sustain and move forward, and macro is showing us that Bitcoin got it right.
Yeah. Well, we did actually get some questions in. So we did get one from Dave. I'm going to grab the one from Dave first. So is the United States waiting for the elections to actually make a real change to lower interest? I mean,
yes
that's an
no.
argument. I mean, exactly. It's like maybe, but I mean, it is election year. They want to make sure that they look good, essentially, and lowering interest rates would probably make them look better, but to the people, and the people are the voters, right? So it's hard to say. It's one of those type things.
If you think back to the bond yield chart, the bond yield chart is not saying we lower interest rates. This is what we were saying. We're saying, yes, we over tightened, we raised interest rates too quick. I'll stand by that, because really we could have just raised more gradually and got to exactly where we are now at the same time. And now we would maybe be in a continue to keep on hiking at this more steady pace. But no, the bond market is telling us interest rates here aren't done. So that's the case. The broader picture overall, demographically, in terms of people retiring and the way that things are heading, is very deflationary. But if the macro landscape changes and things like China, things like deglobalization, changes to supply shocks, if these things haven't gone away, and there are a lot of sectors where pre-COVID everything was just running and perfectly working across the world, and now a lot of sectors are looking and going, okay, yeah, we can go back to that pre-COVID world, but do we really want that same level of vulnerability again? Or do we want to onshore? Do we want to move our supply chains closer, simplify them, and bring them closer at home? That might mean more cost, but it means more stability and security. Well, bringing stuff back and onshoring, and this is a trend I think we're going to see get a lot of steam. A lot of stuff that we've built abroad for decades, where we essentially moved our cheap labor to another country, moved our pollution, moved all the problems of cheap labor to another country. But in doing so, we also hollowed out our own manufacturing bases and made it so as countries we couldn't make anything productively anymore. I saw a really good story of it's just a quick Peter Zeihan short, and it was a story about there's clothing companies now where they have essentially automated. I realize this is a big segue from what you're saying, Dave, but it is kind of relevant to the overall picture, where they can they have automated t-shirt manufacturers where basically they take the cloth, they cut it to size, they sew on whatever, put on the logos, put on the buttons, and get it out and package it. And the unit cost of doing that is cheaper than getting a woman to sew it in Bangladesh. So a lot of this stuff we haven't worked out how to do yet, but we're going to do that in the next few years. And so that's where the USA isn't waiting on elections. The USA is watching the macro landscape. That's the short answer is no. The medium answer is they don't want to really rock the boat this close to an election because it can be seen as meddling if they do something and meddling if they don't. You've got to bear in mind the Fed are in a difficult position here where they're supposed to be non-partisan. So if they start hijacking interest rates, jacking interest rates up and crash the stock market right before an election, well, that makes the incumbent look bad, and that can be seen as meddling. So it's kind of best to do nothing if you can avoid it. But no, overall, the market is telling us that interest rates need to go higher at this time, unless there's a rollover, and potentially the bond market here could collapse, and we see a real spike in interest rates, and that will spur the Fed and force the Fed into real action with another round of QE, an absolute shit ton of it, in order to stop the bond market happening. And for reference of what this is, this exact thing happened in 2022 in the UK, where Liz Truss, famous for having a prime minister tenure shorter than the lifespan of a cabbage, and she proposed 45 billion pounds of basically unfunded spending. Said, oh yeah, we're going to stimulate the economy and we're going to spend 45 billion pounds to do it. And there was no case of saying we're going to raise taxes or raise funds for anything of it. The bond market freaked, absolutely freaked, because it looked at it and went, there is no fucking way that we can handle 45 billion of debt dumped onto us. And it sold off. And in order to, and this is the really, really funny thing, and the sad thing, is that the Bank of England had to do 65 billion pounds of emergency QE to stop the bond market collapsing because of a 45 billion pound budget. They literally could have just created the 45 billion out of thin air, give it to Liz Truss, and then there you go, do what you want to do. And yeah, it would have been inflationary, but at least we'd have got something out of it. And this is kind of the where people want to say central banks, oh, they should do nothing and they should do this. If the Bank of England hadn't intervened there, the UK bond market could have literally collapsed and literally been deemed worthless. And that is bad. That is bad because there is literally trillions of pounds worth of, probably tens of trillions when you come to rehypothecation and how these assets are used over and over, tens of trillions of pounds maybe of assets and real estate and pension funds particularly backing this money. So yeah, they had no choice. And so in that case, when you look at it and go, this is what the unfunded spending results, this is how fragile the system is. The US is still spending money like crazy. Now, the thing, as we've mentioned, and the kind of actual financial reasons for that is because the rest of the world doesn't have enough dollars. So the US can actually afford to handle these debts, the size of the debt. What they can't handle is the interest rate. And that's the problem, is the longer that they roll over these maturities. And I saw an interesting Raoul Pal snippet actually that is quite relevant to this 4-year election cycle, 4-year Bitcoin cycle, that they happen to coincide. They don't coincide accidentally. They actually coincide pretty much with the result of the 2008 recession, where a shitload of debt, when they dropped the interest rate to zero, a shitload of debt was rolled over into US treasuries, or put into US treasuries that had securities between sort of 2 to 5 years, averaging this big every 4 years. So every 4 years, they have to basically reload this debt. And so you end up with this liquidity pump into the market as they have to reload this debt. And this is what we see. We see them every time they have to refinance. If it's at a higher interest rate as it is now, well, then the debt is cheaper to buy because the bond market's absolutely crashed. But the payment, the amount of money that the government are going to have to pay because of this gets higher and higher and higher and higher, and I'm sure it's breaking $1 trillion already. So they have to lower interest rates because things are unsustainable, but they can't lower interest rates while the bond market is collapsing.
Yeah.
So it's an awkward time, and this is it. Is are we in a soft landing period? Well, maybe. There are cases there's good economic data, like you say, but there's also a lot of not very good economic data. Yeah. And the broader picture, the broader debt picture, the broader savings picture, and how the global landscape looks, it's a case of the soft landing's possible, but the dominoes are all set and one of them is going to fall at some point.
But to be fair, though, it's like, if you look at, we still have fairly high inflation. Okay, it's less than 4%, but still it's higher than they're aiming for, right? And when they have to start the money printer up again, that means markets will start buying in, people start buying into the market again because they know that prices will go up, and that's kind of the reaction of that, right? So at the same time, Bitcoin has its halving, which is in 3 days, approximately 3 days, and the result of that is like you said, like with the halving being every 4 years, and just happens to kind of fall into the same year as an election where they kind of want to stimulate the market to make it look pretty good. So it's all one of those, it's like a perfect storm for price to go up. And even if things were getting bad, people are opening their eyes more and more to scarcity in investing, right? Scarce assets overall, like art, like gold, like Rolex watches, for example, it has become a scarce asset, Rolex watches, because it's the same people buying up all the watches and selling them on the gray market. It's the same thing with everything. Everything that's scarce goes up in value, right? Supply and demand. And Bitcoin has that built into it, which is nice. And that's why we Bitcoin. And arguably, you could potentially be buying Rolex watches if you can get your hands on them, and save your money like that rather than buying Bitcoin. It's the same idea, so yeah, it's just a mathematical thumbs up from me, really, when it comes to the whole Bitcoin thing. And I think a lot more people are opening their eyes to the scarcity. We did get a question, by the way, from Ekan here, and he's asking, are Chinese rich people, like, is there high demand for Bitcoin? So there are a lot of rich people in China. Most of the billionaires in the world are in China, but that kind of comes down to the amount of people that live in China. So there's that. But something that is more important to ask, I think, is how risk averse or risk friendly are the Chinese people? So comparatively to like the United States investors, Chinese people tend to be more leaning harder towards risk. And Bitcoin, believe it or not, if you want to, is still a high risk asset compared to the S&P 500 or whatever, because of the volatility. And so I personally think, and the numbers speak towards this as well, that there's a lot of interest in China for Bitcoin. I mean, they tried banning it, right? If you were here for that, when they banned Bitcoin mining, it didn't really work out. People, they did, but people just didn't care that much.
It did, and it was a silly thing to do. But yeah,
essentially, it just made it more popular. Um,
Oh,
yes,
it did
there's
a
not
good
as
job.
much.
It decentralized the mining grid, because suddenly
Yeah,
an awful lot of hash power had to find a new home, and instead of finding one country, it found 50.
yeah.
Great,
So that was
good.
good.
Thank you.
But
Yes.
but in terms of money flows, like yes, on Monday, yesterday. Wait, it's Tuesday today. Yes, it is. God, I'm tired. So ETFs for Ethereum and Bitcoin were approved in Hong Kong, and they are going to start trading, I think, next week. If I can't remember exactly, but they're going to start trading. We talked about this yesterday. We're not sure if it's going to be for everybody right away, or if it's going to be institutional money coming in first. Either way, I think there's going to be quite a bit of interest there. They're not going to be as big as the American ones. I'm pretty sure of that. But there's definitely going to be people buying that. So there's going to be additional buying power coming in, which is good. It's going to keep eating up the supply. And then we have the halving as well, which is going to remove some of the new supply, well, half of the new supply. But overall, it's just we're adding buying power. Pretty like almost like a staircase. We got the American ETFs, then we get the Chinese ETFs in Hong Kong, and then we get the halving. Maybe we get the halving first, actually, before the. So we're just adding on scarcity, essentially layers of scarcity onto Bitcoin here in this month alone, and it's kind of crazy to me. It's not. I don't know if it's crazy actually. We're going sideways into this, price action wise. Most people would expect the price to just go up, but yeah, sideways makes sense too, right? We talked about it before. A lot of the indicators are overbought. We did talk about the cooldown. We keep mentioning this every time. It makes sense that it goes sideways here for a while to see kind of what's going to happen. I mean, when the American ETFs opened, you had a small pump on the day, and then it just fell over for 2 weeks, right? If you remember, if you were here for that, it went up and then it started falling over slowly. Now we're going sideways into this. Question is if the Chinese ETFs are going to make it pump and then drop again. We don't know. Is the pattern going to be the same? Maybe, maybe not. I'm still expecting kind of sideways for a while longer because I want to see that weekly RSI come back down to the midline. I don't want to see it, but I'm kind of expecting that to be the case. And that's going to take a couple of weeks. That's a long time. A lot can happen in a couple of weeks when it comes to volatile assets like Bitcoin. So hold on. Be ready to buy if there's a big dump, I guess. But we'll see. I don't know if you want to add anything to that, Rob.
Our Chinese rich people is the demand up for BTC high over there. BTC high over there. Yes.
Maybe I should just said. Maybe I should just have said yes.
No.
But
so
no.
essentially, the Chinese have a problem. About 70%. Well, they have many problems, as we already said. So about 70% of their personal savings are in real estate, and their real estate ain't worth anything like what they think it is, because they've been building it for several decades, and they've now built more houses than they have people by a decent way. So yeah, the Chinese have an issue in that all their markets are controlled, their capital markets are controlled. There is no direct way, there's no use for the Chinese currency outside of China. Nobody trades in it unless you have to. So who has to is people who participated in the Belt and Road Initiative that took out loans from China. The condition was you buy it back in Chinese RMB. But on the whole, no, the only real use for China is inside China. And so because of that, you can't get your wealth outside the country. There isn't a mechanism to do it, because you can only take your money that's in your approved wallets and spend them in approved places. You can't just log into an exchange and buy Bitcoin. There are mechanisms that people do, and obviously, yes, China, it's big in China, but I think it's kind of a grey market. so it's not readily available. So we have to see, as you know, how accessible this Hong Kong ETF is to everyday Chinese citizens or Chinese rich people, Chinese corporations. How much accessibility will they have to it, and will they be able to actually remove the Bitcoin from their possession? Because my expectation is this ETF will be good for the price of Bitcoin. It will serve as a vacuum for Bitcoin, but overall it's just going to be a Chinese controlled proxy, and the main purchasers of Bitcoin from this ETF, if they are Chinese, will be approved entities, i.e. members of the Chinese government or Chinese billionaires who are members of the Chinese government, or corporations who may well be owned by the Chinese government. Now, this isn't just, Hong Kong is a big stock market. This is more than just China. This is the entire Southeast Asia. This is a market that they can access. It is good for Bitcoin. But yes, it is going to probably be a proxy for Chinese corporations, especially to get their hands on Bitcoin. Is that a bad thing? No, it's not it's just they have as much right to own Bitcoin as we do. This is the thing. We have no right or say that they can't have their ETF, that they can't trade it, that the Chinese government can't just buy 1 million Bitcoin by smashing market buy on Coinbase, if that's what they want to do. But I don't think they'll be allowed to do that. And I don't think they would do that, but they're allowed to. So we'll see. We'll have that is the question is we'll see, but there is demand for anything in China, any asset that isn't denoted in the Chinese currency. So yes, there will be demand for Bitcoin.
I'll say this. I mean, imagine, I'm in Sweden, and I know there's a lot of wealthy people here that they invest in trade, and then they take out profits, they buy real estate, and then they make that real estate into something that can just kind of spit out cash over time, right? That's what a lot of people do with real estate. And I think that's one of the safest places to park your money if you're wealthy. So imagine if in the United States, if your real estate market was no longer profitable at all, where do you park your wealth? And here's where that comes in. It's like, that's where scarcity comes in that we mentioned earlier. So, Bitcoin is one of those, and then there's other stuff. So
I'll just add this. I was mentioning this today, talking about the real estate market in general and the UK one in particular. And this applies to sort of the US as well, but I think most so in the UK, in that the UK has not been conquered for close to 1,000 years. It's got very stable government, very stable currency, very stable institutions, all of this. And so it's also got pretty much some of the oldest property rights going in modern governance. We've been around a long time. So all of the land is taken up. So if you are somebody who is a billionaire and you want to store your wealth in a safe place that nobody can take it, if you're, say, Russian or Chinese or something like that, what do? You phone somebody in London and you go and buy an apartment block, or you buy a multi-million pound mansion, or you buy 1,500 acres of land in Greenbelt territory. So the UK is a country that you do that in. The US is not so is kind of the same, but it's fucking huge. So like there's a lot more land to go around. But you see the likes of BlackRock, the likes of Bill Gates, billionaires, the big people are taking hold of land. Why? It's the one thing that, unless the government falls and comes and takes it off you, then that nobody can take it off you. But there's the thing. Most of the world doesn't have that stability that the US has, that even look at mainland Europe. While the UK had very strong, stable borders, Europe spent its entire hundreds of years in complete and total flux, whereby anybody could come and take your land and pluck you off it and boot you out at a moment's notice if they had a bigger army. And so now we're in that situation where many places around the world do not have the same property rights and the same trust in their institutions that we, as Westerners, take for granted. Yes, and so those are the people. This is always a case of they are the adopters of Bitcoin because they have to. We, in our world, are far more close to in terms of how to invest, we should be behaving like them, not behaving like the gentry, the landed gentry of Western Europe. We shouldn't invest like British nobility, because we're not British nobility. They buy shitloads of real estate and sit on it. Why? Because nobody can take it off them. It's not about getting richer. So we have to invest in the asymmetric assets, and there are plenty of people around the world who will do the same, who don't have any other option, because yes, the stock market they either don't have access to, or the bond market they don't have access to, because they just might not have the infrastructure. But everyone can access Bitcoin.
Well, yeah, so here's something to think about for everybody watching. Why do you think that Bitcoin adoption is much bigger in terms of like normies adopting it, not to invest in it, but to use, right? To use it, right? And the use case being storing value, right? Or escaping into an asset somebody can't take off you, right? El Salvador, legal tender, blah, 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 yada, yada, right? Many countries in the world, even when Ukraine got attacked by Russia, a lot of people used Bitcoin to get out.
So,
right?
I mean, that is the perfect example. And this is the thing that people have to think about is if you are somebody who lives in a developing nation, an unstable nation, anywhere that's at risk, then yeah, your property is not safe. And so you have to think, if you've got any form of wealth, how do you get it out of the country? Cash. All right, okay, well, if your country's invaded, if there's a civil war, your currency is not worth the paper, you just burn it. It's just worth more as burning fodder. If you can spend it to get food, great, spend whatever it is to get some food, because it ain't worth anything after that. Gold, well, I mean, good luck carrying it out. If you get stopped by, I imagine, some Ukrainians will have carried pretty much everything they had in their possession, and they'll have been stopped by a Russian patrol and been sent on their way, having had everything taken off them. If you have either, not necessarily all, but a material amount of your wealth in Bitcoin, and you can teach your family the 12-word phrase, the 12-word seed phrase that will recover their wallet, and you teach it to them in some sort of mnemonic, some sort of story, anything that means that all of them can recite that 12-word phrase from memory, then you can walk out of that country with nothing but the clothes on your back, and nobody would know, or nobody would be able to extract that key from you, voluntarily. And in that sense, if nobody knows that you have Bitcoin, and that's the best way to hold Bitcoin, really, is to just, don't tell anybody where it is. That sits in your head. Nobody knows it. And so it's a case of, if anything happens to me, anything happens to mum, you get out. That's what you use. That's your insurance fund. And that's what Bitcoin should be treated for, if you're either as an investment fund, but also an insurance fund, if you're anybody who is at risk of something like that.
Yeah, I'll say this though. There's a great question here. So storing value, but the high volatility, your value can lose 7% in a day. Well, so here's the thing. It's the only asset of its kind where you can do this, right? What we just mentioned here. So for you, somebody who lives in a rich country, you live in a house, everything is fine. You have a job to go to. Everything is, you don't have to really worry. You're investing because you want to make more money, right?
You have a clear sense of what value is. Yes,
but you don't need to. You're not in Bitcoin because you have to be, right? The real value in Bitcoin is for people that have to have it. Okay, they have no other choice. Okay, and yes, storing value, but then now you're thinking in your own time frame here, right? So if your time frame is, I might need to sell this next week, maybe this asset isn't for you, right? So storing the value over time, you have to figure out how long that time frame is, right? And I know, Ekan, you're planning on selling this at some type of peak, maybe next cycle peak. So you're already thinking about 2030 basically. So even if it loses 70% value over one day, that's your in to put a big chunk of money in. Just wait
'Cause,
until
yeah,
2030. Because
when was the
storing the
last time
value
it
doesn't
dropped
mean
70% in one day? It's been
Yeah,
a long time, you know.
it's been a very long time for that to happen. So in one day, it's not gonna be 70%. Actually, I can't say that.
Well,
It could be,
2020 it could, but say well, somebody bought a Bitcoin for I think $15,000 on BitMEX a few weeks ago because it liquidated down that way.
10,000 exactly. I think
Yeah,
it was
10,000.
crazy.
So, but still, so like yes, you have to think. What is your definition of value? And if it's an insurance fund, and like I say, if you're somebody for whom there may not be anything else that you can store value in which case the volatility becomes irrelevant. You may be in your everything you do is say in Argentina where I can just actually get it up.
Yeah, we've talked about this. We've talked about this previously as well.
Yeah, BTC ARS, is that in there? Yeah, there you go.
Let's see.
Well, that doesn't show much. But hang on, let me just do ARSUSD. Okay, so here is the Argentine currency. Yeah. So if I just do that, and I basically take Bitcoin and BBLX divided by U, then we get the Bitcoin denoted in Argentine pesos. And it still had a 70% drop, but can you spot the bull market? So does this look like an asset that's just hovering around all-time high? So where was the downside risk? And it's Bitcoin still did a let's just put it out, is 68%, I think it is, drop, something like that from the top. And if we look what it's done from that bottom, it is from bottom to peak 2,600% up. So if you're Argentinian, what was the downside risk of Bitcoin?
So here I got some fun numbers here. Not fun numbers, but in terms of this, we have the Argentine peso. It says here, inflation rate in Argentina increased to 287.9% in March from 277% in February. So it added 10% on almost 11% on top of the already existing 277% in a month.
Yep.
Okay, so that means that if you get paid on, let's say, the 25th, like you do in Sweden, and if you don't go out and spend that basically instantly, or you try to save some of that, you're losing almost all its value basically instantly, right? And then storing your wealth in bit, well, not instantly, but very fast.
What's that? 200% annualized. So yeah, you're going to lose
290%.
290%.
Per
Okay,
year.
so you're going to lose the value of your currency is going to drop by a factor of, well, it's got a quarter every year, so it's 75% down every year. So you're probably losing something like 5% a month.
So that would be equivalent to, I'm just going to put this in Swedish crowns for Ekan's sake. If you saved 100,000 Swedish crowns and saved it for a year, and it had the same inflation, that would be worth 25,000 after a year, approximately. So where is the risk of putting that into Bitcoin? Even if Bitcoin drops by 50% in a day, you're still up, right? You're still up. So that's the whole thing with it, right? Because of the scarcity. So scarcity is rarity, right? It's you can't just go get more just like that. Let's see. Okay, so here's a good one. We talked about this earlier. So quick question: if I need money for a house in, let's say, 2 to 5 years, is Bitcoin the right way to go, or should I just save and invest in the bank? I'll let Rob give you the answer, his answer to this, because I already gave you mine before.
So I am somebody who I'm in a financial position where I could have a mortgage, and I don't. And the reason I don't is because I have access to very cheap rent. So my rent is currently it's less than £500 a month. Now, most of my colleagues are I'm an engineer. We have a lot of my colleagues. They've all got good jobs, high-paying jobs. They've got houses, mortgage, kids, the whole normal works. And so, on paper, you look at it and you go, "There, oh wow, they're ahead of me." But when you ask them and you go say to them in this current environment and go, "What's your mortgage payment per month, and how much is your mortgage payment per month in interest, just interest alone?" And pretty much all of them are paying more to the bank purely in interest than I'm paying on rent because I'm in this position to do so. And so because of that, if say they were paying the same, we both paid £500, I paid 500 in rent and they paid 500 in interest and 500 in principal. They're paying £500 off a house. Is that the best, most highly appreciating asset that they could be putting their money into? Probably not. So if I'm matching them and doing the same thing, I can pay my 500 in rent and 500 in Bitcoin. If my expectation is that the Bitcoin is going to go up a lot more than the house, what I can do, and this is where the thing with housing is timing, because if you can time the time to buy a house is pretty much when interest rates are high, and it's just before they start to drop interest rates, because you get in on a high interest rate right before they start dropping interest rates. You probably bought close to the bottom of the housing market, because as soon as they start dropping interest rates, housing affordability instantly goes up. People who couldn't afford a house yesterday can now afford a house. So the housing market immediately starts to recover simply through the fact of lowering interest rates. So what my kind of plan is, if everything sort of goes right, is during this period of high interest rates, and say with the current economic data, I'm not expecting a massive drop in interest rates anytime soon. Maybe we get some cuts if things cool off, but we're not going back to zero in the near to midterm. And so my expectation is that Bitcoin will continue on this bull run or continue to grow and outpace the housing market. So I either want to buy a house when Bitcoin has topped out and I liquidate, or Bitcoin if Bitcoin just doesn't really have an exponential and it just keeps meandering, or when my Bitcoin value is high enough that I can borrow the least amount of money I can and take out the most mortgage I can afford to take in order to get on the property ladder before interest rates do come down and the house market carries on up. Because in doing so, for 2 years I suffer the high interest rates, but then when I come to remortgage, if interest rates are lower, or if interest rates are the same, well then interest rates are the same and I haven't lost anything. If interest rates are lower, chances are my house is gone up, so my loan to value is now a lot better, so my interest rate immediately gets slashed. So there's timing to it, and my plan is currently to be in the superior asset, which is Bitcoin. 2 to 5 years may be a good timeline to look at it and say, well, if all you do is just keep buying Bitcoin and Bitcoin, or other cryptos, and you do well, and eventually you end up with, say, I don't know, $150,000 of Bitcoin. Well, at that point, you have enough that you could take out a $20,000 DeFi loan immediately and go to the bank and say, "Hi, Mr. Mortgage person, I want a house, please." And so it's personal preference, it's personal circumstances. I mean, if you're young, my sort of advice to any young person regarding housing is get a house share. Find as many friends as you can get along with, and all rent a big house together, share food, batch cook, cheaper bills, cheaper rent, share what you can, and just degen the fuck out of everything else into Solana meme coins if you have to, but just something, because right now, say, people are so far away from getting on the housing ladder, and they're only going to get further away unless they save money in something that's going to outpace cash.
Yeah, can I just give a perspective on this a little bit? Just the housing, but be quiet, Rob. So my perspective here is this, and
Phil's house is an NFT that he loves too much.
Okay, so my question to you again is this: Do you think a $200,000 house in your area will appreciate and become worth $1 million in the next, before Bitcoin goes up more? Does that make sense? Is Bitcoin going to outpace the housing market? If yes, then you should be buying Bitcoin, not a house, right? Because even if both of them appreciate, let's say housing, let's say that $200,000 house in 3 years is going to be worth 400,000. In this, if that happens, I'm pretty sure that Bitcoin or other great assets are going to go up way more in value than that, because that's an increase of 100% in the housing market, which is basically unheard of in that time period, I think. But Bitcoin has, just since 2023, is up like 300%, I think. Actually, I'm not sure now, but it's something like that in a year and a half, less than a year and a half.
Just going back to what I said earlier about, say, developed nations, say the UK, the US in particular, are buying land there is a place to keep your wealth, not store it. Now, for poor people, buying a house has been a really good investment in a low interest environment, for the simple reason that you need to live somewhere. So either way, you are going to pay rent. So if anyone could get a mortgage, simply by getting a mortgage and handing the same money you would pay in rent, but as a mortgage, meant that you were forced to save an asset. And that asset has gone up, and people who did that and have done very well, and people who didn't do that have been left behind. But if you are somebody who does have a significant amount of disposable income and you have options, then depending on what your options are, buying a house is not, you have to think about buying a house as more than just, it is just more than an investment. It is a place that you live, that you want to spend.
It's a home.
But do you want to spend the rest of your life in that place? Because you have to bear in mind, houses don't necessarily sell easily in all markets, and this is going to become a trickier and trickier market to find good houses. It's not like 10 years ago where you just bought any house and waited 3 years and poof, you could sell it for more, because those days are gone. And one reason, again, is demographics. The boomers, as they come into their retirement, they own all the big houses, and I mean all the big houses. And what these people tend to do, unfortunately, at some point, is die. And they tend to die around the age of, say, 70 or 80 years old. And most of these people had kids when they were, say, 20 to 30 years old, meaning that their kids are now 40 to 50-ish. And they probably had a few of them, and they've probably got their own kids. So all of these people, because if the grandparents were homeowners, these three kids are probably also homeowners. And so they will inherit this £1 million house 150 miles away from where they live, split between 3 people, that they have to pay a 40% inheritance tax on. What are they going to do with it? They're going to dump it like the NFT that it is. And that is going to happen, something in the region that there's going to be, a couple of 100,000 houses per year that either have to be transferred, because even if, say, there's somebody who decides that they do want to live in that house, they want to keep the family home, well, chances are if they're 50 years old, they already have their own home. So that house ends up going on the market. And if their house is a $500,000 house, well, then who can afford the $500,000 house? And it all trickles down, where either way, this dump, and it is going to be a massive dump of housing onto the market, and people are saying, oh, BlackRock are going to buy it all. BlackRock are only going to buy it if there's somebody they can rent it out to, or they can hold this. If they've got, BlackRock are just somebody who holds customer assets. People think that there's some really scary, malevolent being. Yes, they hold $10 trillion of assets. They're the largest pension fund. What are you laughing at?
I'll put it on the screen for you.
Go on. Rob's rambles. Okay, that's fine.
That's funny.
But yeah,
carry on.
Fine. Oh no, you've lost my train of thought now. Yeah. So, big picture. It's ultimately this this is housing. This is the trajectory of housing for the next 20 years. That supply and demand has kind of dried up. You had the boomers were the largest generation in history. They have now retired, or they are retiring, and their kids all have their own houses. Their grandkids can't afford the houses, and nobody has families big enough to fill them anyway. So there's a huge problem in what to do with this house transfer, and that's going to weigh into this idea that either wages have to go up or prices have to come down, because the boomers cannot afford to sell the shit they need to sell to fund their retirement at the prices they're currently valued at, because we as a generation collectively don't have the money. It doesn't exist.
Okay, so
that's in terms of housing. Buy a house you need to live in if you think it's a good buy and if you want to stay in the area, but do consider, in a world of high interest rates, whether or not buying is actually the right choice. It will be for some people. So for me, certainly right now, it doesn't look like a good idea. It doesn't look like a worthwhile investment to me to have a house.
Yeah. Okay. So I did want to touch something real quick with the CPI though, before I carry on from that. So here's the CPI, right? We talked about this very early, and we're still kind of on it because that's where all this discussion came from. But what's happened is, people freaked out because it went up a little bit. Okay. But the thing is, it's come down and it's been flat. It's essentially flat. It's doing some waves. There's no proof yet that it's gonna start an uptrend. This is just a flat area right now, and that means inflation is sticky, right? Even though the interest rates are so high. It's gonna carry on being sticky for a while longer? Probably.
So I would say it depends. If you think what's been stickiest so far is, you've had food that's stuck around. Well, those prices are probably here to stay, at least for the short to medium term. And it's been housing and energy. Energy, again, it's improved, but the energy market has fundamentally changed. It's not going to go back anytime soon. And housing, well, as mentioned, housing always has a lag, because people get mortgages for 2, 3, 5 years. They take rental agreements for a year or 2 years. So you'll have people that get locked into markets, and then after 2 years, they might not see a rise, but they're not going to see a fall either. And then you've got people in the middle who are stuck paying too much, and then you get other people who are ending up on paying more and more as the market has gone up. So within that boundary, there's a lot of things that force inflation to stay high. And then it's now a case of, if there's another wave of something new that rises, that brings an actual new wave of inflation, or if this is just the new normal and we're going to have this stickiness that slowly grinds its way down to normal over the next few years as the market and all these sticky inflation aspects normalize.
Right. Oops, that's too long.
We have to do a Goose question, or he's
I know we have to do Goose question before he unfollows us or something.
I don't really care.
Let me find it.
Should we just end it here?
Why would he's a team member?
Yeah, exactly.
This is weird.
Yeah. We should call his bluff and just end it here.
Should we call his bluff?
Yeah.
Do you want to answer it? It says
all the decimals. Yeah, go on.
Let's do this. We'll read it out loud and then not answer it.
Tell me, with all the alt decimation and the BTC dominance staying flat, what's the forecast on that? Well, is it going
to go up or down?
Let's have a look. So let's have a look at Bitcoin dominance quickly. This has been a bit of a strange macro one. Well, I mean, you said
sorry,
it's flat.
Everybody. We're a bit silly. We know.
You said it's flat, but I mean, I got these arrows drawn for a while, and it's up. So, yeah, I'm pretty sure I deleted this red, the upper red target, but I did have 58% or so as my Bitcoin dominance target. We got quite close to it already. I think that's going to carry on. To be honest, I think alts are going to carry on lagging Bitcoin
It's the monthly, right?
Yes.
It's the monthly.
So this,
Or
yeah,
weekly?
this is no monthly. Here's a weekly.
There we go.
The weekly looks like the monthly, but with more candles.
It's kind of eerie, actually, that we're getting close to this trend line there, and the upper. We've already wicked up to the upper range there. I mean, maybe this is where we need to go. Bitcoin needs to carry on going flat, and everything else needs to go down. I mean, all the altcoins are down hard.
Maybe this is it.
Maybe that's where we break through that, and then we get that big pump up. Who knows?
I don't. Yeah,
it's not out of the cards or anything like that.
It really isn't. You know, you have to bear in mind that what happened in 2020, 2021 was that alt season lasted 20 weeks. That was it. In 4 years, you had 20 weeks to actually make any money off altcoins. Right now, yes, okay, people, you know, I know people are seeing meme coins and things like that. Like, to be honest, I might have a dabble with those, but I want them all to rug first. I want an 80-90% crash in that. So maybe now is a good time that we get that, with Solana not doing very well. But yeah, altcoins are not really the place to be. Select altcoins have been. You know, we look at the likes of Solana and see that has been gaining market dominance, but it's only been gaining dominance that it's taken from ETH. So we've not seen an expansion in any real sense of the altcoin market yet. We've just seen isolated projects pop, and those are the projects that I'm sticking in and paying attention to, because these winners tend to keep winning. And yeah, Solana, I'm still a buyer. You know, most of them I've purchased. Most of them I've made have been through coin futures, so my cost basis is like 0 on them. But I've bought a fair amount of them as well, and I'm going to carry on doing it because it's cheap. And it is cheap. It's so. But overall, in altcoins, my portfolio is, I think it's 50% Bitcoin at this point, around 15% Solana, and another 10% Solana alts. I haven't got a lot of cash at the moment. If we take another leg down at this point, I'm a long-term holder. So, I mean, I would do. If we take a leg down now, I will stop having as many takeaways. To be honest,
I'll say this: I'm 51% Bitcoin, 34% Solana. The rest is Solana alts and a little bit of injective. That's it. Yeah. That's it. Cool. Bitcoin has still outperformed the other ones, weirdly enough. It's one of those things that the alts will pump like mad eventually.
Yes,
that's what they do. Like Solana did. Solana did move up because it was 25% of the bag, and now it's 34. So,
but it may be that this you know, if Bitcoin does break out and dominance does take a real hammering for altcoins there, and we get something stupid like a 70% Bitcoin dominance, quite honestly, that is the point where you kind of consider emptying your Bitcoin bag and getting out of Bitcoin, because
that's a nice allocation.
He knows it. Steve's on it.
Yeah, let's go, Steve. Yay.
But I've convinced him that because he is 90% Bitcoin, that his Solana bag is probably a bit light, or his altcoin bag in general is maybe a bit light, and that Solana is a good option to have.
Yeah, my allocation goal was 50% Bitcoin, 25% Sol, 25% divided into a bunch of altcoins that are good, which is exactly what I did. And since prices have been moving, the allocation has been skewed, and I don't really care about that anymore, because I care about that during the bear market. That's when I allocate, and then it just goes wherever it wants to go. So, good stuff. I think we're going to end it here.
Let's end it. It's 74 minutes.
74 minutes. I can't even count that far. But yes, let's do this one to end like we did last time. Big faces. Yeah, we're finishing up here, guys. You know the deal. Follow, subscribe, all that stuff. Remember to help us out on TikTok. We need some likes and some comments so we can respond to and everything. Get that algorithm
Yeah,
to wake
have
up.
some arguments.
Yeah.
Yeah.
Fight us. Call us dumb. Disagree with us so we can fight you on TikTok. Or if somebody else disagree with us and you don't know who they are, just
Fight them.
Fight them. Like, not physically. And don't say mean things, but
No, fight them with facts.
fight them with facts. That's how we like to do it.
Fight them with
All right.
facts.
Yes. All right. Thanks, guys. We'll see you next time. I almost forgot. We're doing I'm gonna do my very best to do a live stream on Friday, where we're gonna watch the halving occur live on stream, and that should be around, as it looks. Just double checking. There's 3 days, 1 hour, and 49 minutes left right now, as it stands. It's gonna change a little bit over the course of the last few days here. But let's try to aim for like Friday night stream hangout like usual. But I'll keep that one running for
as long as needed.
As long as needed.
It's going to be one of those where it's like it happens to be 54 minutes between blocks for the halving, and you just got to sit here like.
Yeah, the last block is like one of those. The last block is going to take 3 hours. Rob, please stop doing that. I have to stop the stream before Rob does something. Okay, bye everybody.